Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's November 2nd. We got a lot of stuff going on today here, and of course, it's the day after the FOMC announcement. So let's kind of jump into it. We'll start off with the our economic calendar, and of course, every Thursday we get the weekly jobless claims. So last week we had the numbers came in at 234,000 people applying for unemployment. This week, or the forecast for this week was 235,000, and it came in much under than forecast, and 5,000 from last week, down to 229,000. So great numbers. Still shows that job market is doing very strong, which leads us into tomorrow's numbers, where we get the release of the Bureau of Labor Statistics numbers. So we'll see how many jobs were created. Right now, the whispered numbers are about 300,000. So if it comes in less than that, obviously there's going to be a huge disappointment. We could have overflow from September's numbers. As we had the hurricanes in there, but I think some people might be forgetting about some of the fires that we've had here, and that might create some numbers that could, it will be interesting to see if those play a factor in there, as California had their worst damage in history. They had, I think, last time I saw a number of about $3.3 billion in damages from these wildfires we've had this year. Um, let's move on. We got the productivity for the third quarter. We had a 1.5% the last reporting, 2.9 forecast for the third, and came in much better at 3%. This has helped keeping inflation in check, so to speak, because when you have higher productivity, it helps keep the costs down, and by keeping the costs down, inflation is kind of kept at check. So when you're getting people working and it's cost effective, again, it's keeping inflation low. Unit labor costs we have for the third quarter as well. So the previous reporting came in at 0.3%. Forecast for the third quarter was a 0.5%, and it came in right at expectation. So unit labor costs went up a little bit. Again, a lot of this could be energies and stuff prices, but we saw a little bit of a spike in terms of wages, as we saw earlier this week with some of the data. So let's go over the headline news. We'll talk a little bit about what we mentioned earlier. Stock market is down. It started off a little bit further, but it has come almost to unchanged levels. We had some earnings reports come in, but those are almost kind of waved off today because we had the FOMC meeting yesterday. Not much has changed on that side. But later today, about noon Pacific Standard Time, we're expected to hear Jerome Powell being announced as the new Fed chair. It's leaked out quite a bit, so the markets pretty much have that price in, so there shouldn't be any huge movements in terms of Jerome Powell being named. But what came in this morning was the new tax bill. Now, there's been some speculation going back and forth about the corporate tax rates being permanent, and now it's basically stating it is. It's going from 35% to 20%, which is obviously good news for corporations, and that should be good probably for taxes. But as we saw before, again, we haven't read through it, but what we're hearing preliminary numbers is that it could be eased in, gradually phased in there over about, I think, till 2022, over a 5-year period over to 2022. So it's not going to be all at one time here. And that earlier in the week, that's what kind of disappointed markets. So we'll have to kind of wait to take a look at it, but that was one of the points that we saw in there. Another point was raising the tax credit for child tax credit from $1,000 to $1,600. So those with children will obviously get a benefit there. Uh, and then we got the interest deduction is going from $1 million deduction on purchases. So if you're buying a home, when this kicks in, it's going to only go up to $500,000. So they're going to reduce the interest deduction on mortgages from $1 million to $500,000. So I believe those who already have a home in place, most likely I believe those people will be grandfathered in. So, but if they elect to move, that might be a different story. Again, haven't read the technical details. You may want to talk to your tax advisor on that, but that's what it's kind of looking like. What I'm seeing on the headline news here. Again, haven't read through it. It just announced, and again, your tax advisor would be best know that information, as I'm sure as they receive it and can digest it, probably get that information out to you. But again, that's not going to favor us in California if that's the case, primarily because most homes are over $500,000, and unfortunately, that kind of hurts us. But I guess Middle America, that's going to help them. Um, and last but not least, it's not really affecting us here, but Bank of England basically had their first rate hike in about 10 years. They went from a quarter to a 0.5%, so they raised a 0.25% on their funds over there. So again, I guess the U.S. is starting to set a trend of raising interest rates. So BOE just did it, so we'll have to wait and see if the Euro EC does it in the near future. So let's take a look here at the bond market. We are taking off. We finally went above this resistance here level that we've been trying to break above here for the last couple of days. Now we're up against the 25-day moving average, which has kind of kept us under here for quite some time here, for about over a month and a half so far. So if you can see this, as soon as we broke below it, it's been pretty much kept us at bay, kept us down, kept us down. Now we're trying to break above it. We'll have to kind of wait and see. We do got news coming in tomorrow, the labor news, and I'm not sure if that's going to be anything to push us up. If anything, it could potentially put us down. A lot of people think it'll be good news and it'll push bonds lower. So again, be very cautious. It's possible we could get a surprise, but again, be very cautious going forward. If you got interest rates you're floating out there, if you're refinancing or looking to purchase and you're just kind of floating your rate to see if you can get something better, you may want to try to capture the gains we got now, because it's potentially we could get pushed back lower again. As you can see, we've had this resistance here, right here, pushing us down further and further. All right, so let's take a look here at the 10-year Treasury. The yields are pushed down further. We're down to about 2.34. We're down below the 25-day moving average here on the opposite. So, we're up on the 25-day moving. We're pushing up against it in the bond, and now we're pushing below it on the Treasuries. So what does that basically mean? Bonds are about the same. We're up about 8 basis points, so it really doesn't translate any better pricing than what we received yesterday. So pricing is going to be kind of mixed, or about the same what we saw yesterday. It's not going to be really a big difference of our interest rates levels from what we saw yesterday. All right, so that pretty much wraps it up. Sorry for kind of the long PowerPoint presentation here for you guys, but I hope you guys have a great day. But if you guys want to get more data, just go over to Twitter. Find me at Mike Bjork on Twitter, and you'll get your latest updates throughout the day. Have a good one. We'll look forward to see you guys tomorrow. Bye.